Hi, morning. Great to have you on the show. Kaustubh, let's first talk about what's going on with Trent and, what's been your read through from the quarterly updates. What's the view now on the company? What's the target price? What are the further downside risks?
Yeah, good morning, Nisha, and to the team. Yeah, so Trent business update, the revenue growth of 17% was slightly lower than what we and Street were anticipating for the quarter. And uh, we were expecting more than 20% growth for the quarter. This was on the back of the fact that we were anticipating that, this time festive season was a little earlier compared to last year. So there might be some, increase in sales at the fag end of the quarter. But 17% growth was lower than what we were anticipating. Uh, See, Trend, I believe the SSG growth or like for like growth should be in single digit, and we should expect if that sustains along with that store addition growth. I think that should be a normal kind of a revenue growth we should anticipate in Trend. I think the base was quite high for last few quarters, and now that the base is normalizing. So on normalized base, we should expect it's hiking to close to 20% growth, in the stable demand environment. So what we believe is that this third quarter, because of the festive push, we might see, growth to be better than what it was in Q2. But we need to, monitor because April as a category as a whole for last 2 years have not done extremely well. So we believe that some of the categories like apparels, footwears, I think they should come back on track with this GST push or the tax push, benefit what the government has taken. And I think the festive season will give us the clear indication. And if that momentum continues to sustain, I think Trend will also be one of the beneficiary because in value fashion it has done extremely well. I think that momentum should pick up in the second half of the year.
Kaustubh, hi, this is Harsh here. Kaustubh, just curious, what does this do to estimates? The street largely was penciling in 25% growth for FY26, which also was a bit of a disappointment, frankly, when that number was put out. Talk to us about what this does in terms of that number, because that, when I was doing the math, that was looking increasingly difficult to achieve.
Yeah, so if Trent has to achieve that 25% kind of a number, then in the second half they have to grow, at around 30% kind of a growth they have to achieve in the second half. So if they manage to do that, I think that 25% growth is achievable. We need to also look into the store addition number. In the first quarter, they haven't added, any store on net basis. Q2 they have added around 50, more than 50 stores. For the year, their guidance was around close to 200 stores. So if in the second half, if they are able to add, as per their guidance, around 150 store, I think that will also give the push. So it is kind of a second half, quarter three numbers will give us the clear indication. But at the current juncture, first half growth stands at around 19%. For that 25% growth, they have to do much better in the second half of the year.
Kaustubh, what do you make of Titan? Because those numbers were extremely strong. So trying to understand what is your sense of the outperformance here? What is the guidance versus can they beat that for FY26? Give us that sense because two completely different pictures in terms of how the business performance is playing out.
Right. So Titan, 18%, 19% growth in the jewelry business was much better than what we were anticipating. In fact, what even the street was anticipating, mainly because of the fact that Q2 FY25, the base was high because of the custom duty cut. So there the growth was around 26%. Q2 this year, we have also seen gold price, inflation to be much higher. So we were anticipating growth to be lower at around 10% for the jewelry business, but they have done 18%, which was commendable. They have indicated in their release that there is not a significant decline in the buyers count. So that suggests that the demand is there, but there is some kind of a pullback because of the higher gold prices. So if gold prices stabilizes from here, I think that demand will come back on track. But having said that, the required jewelry purchases, for festives or wedding are still going on, and I think that is helping this jewelry companies, and also Titan is benefiting out of it. Another point is that studded growth was higher. It was in mid-teens compared to what the gold. Also, if we need to look into the carat length number, carat length also achieved around 30% growth, which was also higher compared to what its jewelry business growth of around 18%. So I believe that carat length should continue to do well, and I think the growth over there should be quite strong. Okay, and that I believe will continue to help Titan's jewelry business along with the steady demand in the quarters ahead. So this quarter there was some bit of demand coming up from the festive Navratri season. I think more of the festive season demand should flow into the Q3 as well. That is Diwali and other, and also the wedding season. So I believe that Q3 also should be much better for Titan, considering the momentum what you have seen in the quarter two. Important to watch out for is the jewelry business margins. They have indicated that they have done higher advertisement and promotional spends during the quarter. So there might be some, pressure on the margins, but the company has maintained their guidance that for the year they are expecting their margins to be at around 11%. So quarterly margin numbers should not give us any, should not be looked upon. I think the year-end margin numbers for the jewelry business should be looked upon. So on that context, I think Titan's performance was quite strong. And discretionary premium segments, we have seen the categories are doing extremely well. And I think in that context, jewelry also as a category is doing extremely well. And that's why, we are seeing these good numbers for Titan.
So directionally, you are going to be revising your rating upwards, I'm sure, Kaustubh, or at least the price targets?
We have a buy rating on Titan, and we have a price target of 4,115. 4,150. I think quarter two numbers and Q3 the momentum I think should be much better. So I believe that Titan should be looked upon from that perspective in the retail space, especially in the luxury retail space. I think also the stock has been kind of underperformer. I would not say underperformer, but has not done well compared to what the other stocks in the space. So I believe that this provides a good opportunity for somebody to look into a stock like Titan from the better growth perspective.
Sorry, very quickly. I have just maybe 15 seconds. Does that mean that there is an upside bias to the target price you have, likely?
See, it depends on the numbers, how the margin numbers are, for this quarter. And again, the commentary on how, what would be the, how is the demand shaping up for the quarter three. So I think that would give us the clear indication whether there is any upside indication from the current level. Also, the gold price would act, a key over here, because gold prices have gone up substantially. So that volatility will continue to be kind of a risk. But the momentum what we have seen in terms of purchases, I think it's better we should look into the margin numbers and also the commentary on the quarter three numbers.
Okay. Thank you so much, Kaustubh. This has been great. It's been a wonderful conversation. What we'll do is we'll slip into a very short break. On the